Hi traders, today I want to take a look at using a PE ratio right on a thinkorswim chart. That is looking at a historical PE ratio, picking up on trends in different areas over a 5-year time frame. But before I get into that, I wanted to go ahead and run through some disclosure items before we get started here. Information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. The paperMoney software application is for educational purposes only as well. Now, investing in stocks involves risk, including loss of principal. Past performance is no guarantee of future results. All right, and with that, let's go ahead and take a look at our screen here. I just wanted to highlight, you can see down below here, we do have a chart, first of all, of MasterCard. And on this chart, we've got a PE ratio listed below. Now, it is a historical PE ratio. It is a weekly PE ratio, and it is a Thinkscript. And a quick note on Thinkscripts, they aren't guaranteed for timeliness or accuracy. This script I will have posted for you down in the description section of this video. So you can take a look at that and utilize that and import that. But a quick note, just to highlight this, it has to be used over a weekly time frame. And I'm just using a 5-year here. And there's a couple quick notes, as you can see here on the chart. Now, as we look at Microsoft, back in 2022 over here, this is where we're seeing really the low PE ratio come in right here. So the PE ratio, really a combination, right, of price to earnings at that price. Now, at that price, if we look at this level, just using the thinkorswim tools over here on the left-hand side, you can see over here, we're just about 28.5. I'm just pointing at this area and looking over here to the far right, 28 to 29 range. And you can see at that level, that was the lowest level that the stock hit. And so in other words, some traders, investors might say, Microsoft, sometimes they might have a tendency to bounce around when a PE ratio is, this is 30 range, 30, 31. You can see that here. But something interesting has been happening on this chart as well. Notice over time, prices are up, but yet the PE ratio is actually down. So what's been happening? Well, what's been happening is the E portion, there's the PE ratio. The earnings portion has actually been going up a lot more than the price. And that's what's brought this PE ratio to lower levels. And you can pick up on some of that over here just in this corporate tool that can be added on here in terms of earnings that are being made on a quarter-to-quarter basis. But the PE ratio is right back down towards this low here where it bounced last time, but prices are a lot higher. What it tells us, though, is that investors purchasing this company in terms of the PE ratio are getting it at a 28 range type ratio. You can see, or 28 to 29 ratio, just like they were all the way down here. There are some other things you can look at, of course, with this. This is an interesting historical comparison, but it lets us see what is trending. Well, we can see right from this, earnings are going up, and the PE ratio is actually at its lowest point, or near its same lowest level that it's been in the past 5 years as well. All right, some other things to also consider too are what's referred to as value traps, where the PE ratio might look good, but are there deteriorating prospects within the company? In this case, actually, the earnings are still continuing to increase. Now, what would be of concern is if you saw a sharp drop over here, and maybe the price is even below this level, and the PE ratio is substantially lower. Let's say the PE ratio is at a 10. Well, one of the issues is that there might be an expectation that earnings of the earnings of the company is going to continue to dip and dip and dip and dip. And that's why price is actually sped up to catch up with it. And maybe that's one reason why the PE ratio is as low as it is. Let's look at a couple of others here as well. So here is another company, Home Depot. You can see down here too, what PE ratio did the company actually tend to bounce off of over this 5-year time frame? Well, if you come down here and look, you can see it touched, 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 touched. All of those, and by the way, it's fairly even on price, except we were up a little bit higher over here because earnings were increasing, but the PE ratio very close to being at the same spot. So what is that level? What is that number? Let's go ahead and just take a look at it. We're right here around 16 to 17 range is where this stock has historically, over this 5-year weekly time frame, tended to bounce. So what some traders might do is they might say, well, maybe I'm more interested if this stock comes down. If I start to hit in that 16, 17, 18 level, maybe the value investors out there might begin to pick it up and prices could bounce. Okay. Another thing on the upside too are, where do prices tend to spike? If you look over here, here is this is above 30. They might spike and top, but these levels, when the price of the stock is above 30, you'll notice up top that prices didn't hold up too well above these levels. In fact, when we got up to these points, they tended to do what? They tended to fall back, and it could be just suggest, and maybe that's where some of the value investors, or whatever the case might be, tend to get out. This also too was yeah, you can see that's clearly above that range, but maybe that could be considered an overvalued area where it's just too expensive, right? Or the prospects of Home Depot in this case might just have to be so much stronger, much more growth, more store openings, whatever the case might be, to keep the stock going up higher there. Okay, but using the PE ratio on a historical chart can be quite useful. As I mentioned, I will put the script listed down below. You can tie this into other technicals as well. I might leave there a link to go ahead and take a look at too, if you're interested in tying it in with technicals. But on that note, there's a lot of great information that can be gained from this. You can also go out to longer term time frames, but I wanted to share that with you today.